Hello friends, welcome again. So this is your Trendline investor. So today what we're going to look at is four stocks that actually have a potential to give around 50% or even greater returns in the next probably 6 months to 1 year or so, even greater than 1 year. Now every week Sunday at 2:30, I send out a newsletter. Now, this is the newsletter that you can see. I send out a newsletter to around 1,500 plus people, and this family is just growing. So, if you haven't subscribed to the newsletter, do subscribe because we have some beautiful content related to markets, which is sent out every Sunday at 2:30 p.m. For people who are learning, who are fresh to markets, who are beginners in markets, or for people who have a full-time job and do not have the time to analyze stocks. Now, in this newsletter, I cover basically three sections. One is Nifty Outlook. So I've been, telling my subscribers that markets are not going to go down anytime soon, and this is a massive bull run that you want to be in, and you have to not book profits. And I've been telling this in the last 12 newsletters. So I've sent out 12 newsletters, 12 weeks. Investors have been getting guidance from me. So if you haven't subscribed yet, do subscribe. Also, I talk about a sector to watch out for in the next coming weeks. Like for this week, I've discussed about Pharma. And then I also tell about the market breadth, which is an indicator that I use to understand the underlying dynamics of the market. And last but not least, I give four stock picks every week, and I share them with subscribers. And I have all these stock picks cumulatively stored here. So I have kind of stored them here. And till now, we have hit 3 stop losses because of the dull market. Now, if someone says that they have a strategy which will not hit stop loss, then that's pure lies, right? Because in markets, some stocks will go down, some stocks will go up. But the beautiful point to note out here is, even if you have invested, let's say you have 1 lakh capital and you've invested 5,000 stock in each stock, you'd have lost only so much, right? You don't have lost much money. So even if you had 10 lakh capital, you'd have probably lost just 6,600 on here and 4,000 rupees there. So it's hardly 1% of your capital, right? But still, if you notice the best performers, like I mentioned here, we've had ICL is up 59%, Kitex is up 44%, JK Lakshmi is up 37%, and Shraddha is up 30%, all just in a matter of 3 months. Now, some stocks were recommended even early, even later, not complete 3 months. And these stocks, if you invested 5%, would be up, almost. If you invested 5% of, let's say, 5,000 on 1 lakh, you'd have been up 3,000 on 1 lakh capital. If you had 10 lakh capital, you'd have been up 30,000. Now, compare the profits that you're making with the losses, right? So losses was just 6,000 on a 10 lakh capital, but if you had made profits, you'd made 30,000 profits. That's how you have to look at markets, right? Now, this sheet has everything that you need in order to invest, right? I've also covered some FAQs which tells you that you should not be investing more than 5% of your money in one stock if you're a beginner. If you're not a beginner, there are multiple ways to do this, and you can allocate your money how you want to allocate, right? But everything is in this sheet. I have the stop losses updated. If you see here, I have the initial stop loss, then I trail my stop loss, because as and when the stock starts moving higher, you need to move your stops higher so that you don't lose money, or at least you protect some money that you have made till now, right? So it's a free strategy that I provide, a free newsletter that I provide every week, and I take responsibility. Like, I've updated stop losses which hit this week, and don't just follow someone who doesn't know about markets. You need to find a trusted advisor. I'm not an advisor, to be honest, but you need to find a trusted advisor who can help you with financial planning or with your stock planning. But otherwise, someone who knows about markets, you also can subscribe to them. So this week, again, we have covered 4 stocks. Now, these stocks all are very good quality stocks. Like, just to give you some names, this week I've covered Rossell India, I've covered Jubilant Ingrevia, which is a chemical company, Easy Trip Planners, and also Lincoln Pharma. Now, all these stocks are pretty good stocks. Some of them are from the pharma space, like Lincoln Pharma. This is from the the e-commerce platform business, chemical space, and this is from the tea industry plus the defense space. Now, before I tell you more, let's jump into the stocks and look at how the stocks are. Now, I just want to talk about something else before we jump into the stocks. Now, each and every stock, I've clearly given the entry zone, the stop loss, what are the fundamentals of the stock, and also what is the fundamental reason I'm investing in the stock. For example, let's take Rossell, right? Now, Rossell posted its highest ever sales at 322 crores, and it had a record 68 crores in operating profit in the last year. And also the operating margins increased from 16% to 21%. Now, you have to look at stocks where you have a reasoning backed by fundamentals plus technicals. When you combine both, you get beautiful picks, and some of these picks can actually be multi-baggers in the long run. So if even the stock out of these 40 stocks, I'm sure there are 10 stocks which can give beautiful returns in the next many years. But it completely depends on you. Don't allocate too much of your money just because I'm telling you this stock. Do not go and put all the money tomorrow in this stock, right? So don't allocate more than 5%. If you're new to markets, then anything more than 5% is just too much to handle in a portfolio, because if you invest, let's say 10-20% of your capital on one stock, and if it goes down 20%, you lose 4% of your capital, right? So don't invest too much. Stick to 5% if you're a beginner in markets, and if you know markets, then you can use my stock ideas and you can invest even much higher. So let's jump into our stocks for today. So let's look at Rossell India, which is our first stock. Now, as I mentioned, this stock is in the tea industry, and they recently diversified into the defense also, right? So if you see this stock basically has been in markets. It has been listed since 2012. Then it came all the way down. It went all the way up. From 27, it went to 170, and from 170, it came back to 30 odd levels, and again we are heading higher. Now, in technical terms, when you see a stock crossing all-time high, it is a very bullish sign. The reason is, since it's at all-time high, the number of people who are holding the stock will be less in losses. Most of them will be in profits, especially people who are holding this since many years. Now all of them are in profits. Now that's a very strong bullish sign why the stock might head higher, because if everyone is in profits, the majority of people will not book profits. So they let the stock go higher as much as possible. And that's one of the reasons I look at all-time high stocks or breakout stocks. Now this is in 2015, it tried to head to 173. And again, in September 2020, it tried to break that high. It couldn't break. And now finally, we're having a 5.5-year breakout towards all-time high. Now look at the volumes, right? Now, if you're a beginner in markets and if you don't understand volumes, it is very simple, right? So all the volume tells you is this month, around 5 million shares were bought in this month of May. And next month, around 15 million shares were traded, right? And again, this month, 10 million shares were traded. Now, in the last 3 months alone, around 30 million shares have been bought by big institutions. Now, can someone like us buy 30 million shares? No, not really, right? And that's why you need to look at volumes and breakouts. Now, this is a beautiful breakout, right, to all-time high, and you also have volumes. So this stock, then what it's recently doing is, now it broke out here around this high, then went high, it's again coming down. Now this is just a normal correction in every stock, right? So if it goes high, it corrects. It goes high, then it corrects. Now that's a repetitive cycle of markets. That's how markets work. You can't expect a stock just to go one way up. Any stock which moves higher will also come down, and then it'll again head higher. Now these are basically short-term traders who have bought here, are just booking profits, then it comes down. But long-term trade, in the long-term cycle of the stock, the balance is still on the buyer's side. On the short term, maybe it's on the seller's side, but in the long term, still a lot of buyers who are willing to buy the stock at every dip. Now it is just retesting this zone again. So that's the reason why I've given a buy. So if you're looking at the stock, then you can buy at around 180, 190. So it's right around 177.6. So you can buy the stock with stop loss at 160, right? And this can head much, much higher from here. Now, just to give you a context, the target is around 230 in the short term and 300 in the next few years. So that's probably 80-90% return on the stock if you're willing to hold the stock with a stop loss at 160 odd, right? Don't forget, I do update the stop loss every week in case if it's needed. If it's not needed, I don't update. So do follow that sheet for the stop losses. So if you're liking this analysis till now, don't forget to hit the subscribe button, and don't forget to share this video with your friends, because that's the motivation that I get when I have a lot of subscribers. We're almost reaching the 1,000 subscriber mark, and when you share it with your friends, we get more subscribers, and I'm more motivated to post such videos. Now let's move on to the next stock, which is Jubilant Ingrevia. Now this company is a very interesting company because the fundamentals are so good that I was just tempted to give this as a recommendation this week, even though this has moved so much higher. Now, I wasn't tracking the stock until recently, because the numbers are fantastic. I just went through the stock fundamentals, and they're just too excellent and too difficult to just ignore the stock in this bull run. So again, the stock was listed recently in March 21, and this is a company was a subsidiary of Jubilant Foodworks, not Jubilant Industries, and it was kind of spun off and they're listed now separately. So this stock, again, if you see now, this is what I call a beautiful uptrend, right? An uptrend is when a stock goes high, it comes down, it goes high, it comes down, goes high, goes sideways. In fact, here also it's sideways, here also almost sideways, right? It doesn't correct much, and then it again moved from 500 to 600 odd level. Again, it did a small correction, not a major correction, and then it's kind of taking support right now around this range. Now, if you notice also here, the trend line is beautifully supported. Now, I've written a beautiful, nice blog on trend lines in my blog. So if you've not seen my blog, this is the blog that it's my blog, and I write a lot of articles every week. I cover one article, and you can go and look at this blog. And I've written using trend lines, how to use trend lines, identify changes in stock trends. Now, this blog keeps on developing. I write every week one article. You can go here and look at how to draw trend lines and how to use trend lines, right? So again, don't forget to like my blog, and don't forget to share my blog with your friends and your relatives. But let's come back to this stock, right? Now, this stock, after the month of June, 4th of June, it went sideways completely. It started correcting from 600, it came all the way down to 520 odd. This is again a regular thing in market, right? And after coming to 520, it just went sideways and it gave a breakout again in 22nd of July, right? Now, if you see again volume, see the volumes here, 3 million, 9 million and 10 million. That's almost 24 million shares just bought in 3 days, but on an average it wasn't that much, right? So if you see, your volumes have been very, very less. Now, that's what I call a very strong stock, which doesn't go down much, or which is bought when it breaks out, it goes high with high volumes. And now, off late, the markets have been correcting, the small caps and mid caps have been correcting, but this stock is just not correcting. If you see, we have been having continuous green candles, right? So we had green candle here. So 1, 2, 3, 4, 5 out of 7 days, we've had just one red day. Now that shows how strong the stock is, right? Even though the market, small caps and mid caps are going down, no one is willing to sell the stock, right? Now that's how you identify good stocks. And it also gave a breakout today. So this is a Monday. I gave the recommendation yesterday. Now this stock has given again a breakout today with decent volumes, right? Now, this is the second stock that you want to be invested in. I think the stop loss here is pretty small. So I've given a 515 stop loss, and you can buy around the right levels, right? So today it opened at 617. Buy range was around 600, 620. So you can have easily bought that stock today. Now, again, the fundamental reason here is the company reported a 67% increase in sales quarter and quarter. Like last quarter to this quarter, it reported a 67% increase in sales and more than a 2.5x increase in operating profits, backed by improved operating margins from 17% to 25%. Right now, that's how you have to look for stocks. Look for strong stocks which are fundamentally good and plus which are technically also good. Right, so the targets for this stock I have is around 770 in the next few months. Now, since this is still a fresh stock, I don't want to give much higher targets. Probably can go much higher. And if you're willing to invest in the stock, do hold. It's a very good stock. But for now, that's the target I'm looking at. And if you want to book profits at that point, book, or just follow my sheet where I update all the stop losses every now and then. Right. So also, if you haven't subscribed to my YouTube channel, you want to subscribe to my YouTube channel. So we have a lot of videos going on, and every week I post some videos here. So if you go to my channel, you will see there's there are some playlists here. Like I have an everyday session at 11 o'clock in the night during the trading days, where I give my market outlook view for the next day, and also I trade with real capital around 1 lakh, which is called Trade with Trendline Investor, where I help beginners understand how to trade in markets and how to do short-term positional trades, and also how to manage risk very nicely, right? And then we also post a lot of stock ideas every week. I'm just going to pause this. I'm just going to show you the different videos that we have. And recently I posted a very good video on how. Hello friends, welcome again to another video. Recently I posted a video on how I made 3 lakhs in ICIL. I'm still holding that stock, but that's a very good learning video in case you want to understand how I invested in that stock. Also, 4 stocks every week, like how I'm doing right now. Also, some of the things that you have to notice on my YouTube channel. So if you haven't subscribed yet, go and hit that subscribe button and also share this with your friends. Now let's jump into the next stock for this week, which is Easy Trip Planners. Right now, Easy Trip Planners is you might have heard of this company. You might have booked a holiday trip on this. It's a company in the leisure space where it provides, booking services. It also provides holiday packages. I'm not promoting this company, but that's the business that the company does. Now, here today, I want to take a few minutes or probably a few seconds to explain this beautiful setup that we've had here. Right now, if you see, this company was listed on 19th March of 2021, then it just went sideways. Right, and then it formed a beautiful base here, and it gave a nice breakout here with increase in volumes. Now the volumes you see here, 6 million shares were bought. Now that's called IPO base breakout. Now I'll give you another example of Happiest Minds, before we switch to the stock again. Now again, Happiest Minds also had a similar IPO base, if you see, and this is the base that I look out for for good short-term trades. Right, it's a similar base that we had, and we had a breakout here. Right, and both stocks had similar setups. Only thing is here it went on for 4-5 months, but in EaseMy trip it kind of had a very short-term consolidation before it broke out. Now that's called IPO based breakout, and after the breakout we went all the way from 200 to 450, and then again we've been consolidating for 1.5 months. It's just a similar consolidation to Jubilant Ingrevia, which I just covered in the previous stock. And now again we are seeing a nice breakout in this week. And this is a 1.5 month consolidation breakout, and volumes also increasing. And also, if you see, this is a ascending triangle breakout. Right now, some might say here it came a bull pullback. That's totally fine. It doesn't matter. But on the weekly chart, if you observe, that was a beautiful breakout. We're going to hide all of this. Beautiful breakout above this level. Right. So again, a nice stock from a fundamental perspective. The financials are excellent. As I always say, look for increase in sales. There was a 40% increase in sales in FY20, but they dropped due to pandemic. But look at the operating profits, right? It went from 13 crores in FY20 to 44 crores. Even though the sales dropped, the operating profits increased. Now, what does this show? This shows that the company has actually done something internally due to which the operating costs have reduced. Now, that's a very bullish sign. Right now, if the pandemic opens up, if the economy opens up again, and if people start traveling again, now this company can do really well because the operating costs are now in control. Right. So again, I've mentioned this stock to buy at 470, 485 odd levels, with a stop at 400 for targets of 600 in the short term. Right. It can go much higher. Just keep telling your stop loss in case you want to catch the bigger move in the stock. Now, the fourth stock today is from the pharma space. I've already given 3-4 stocks in the pharma space, but again, the reason I've given this recommendation is because it posted its highest ever sales, and also the operating margins increased from 17% to 21%. This company is now a zero debt company, which means there are no debts in this company. Also, it increases cash reserves very significantly. Let's look at the chart. Now, this stock is not a very big pharma stock. It's just 700 crores. It's a very small cap stock. Now, in a bull run, I always look for small cap stocks because they are the ones which will give you good run and which will make good money for you, right? So just looking at the stock again. Now, since 2016, it was listed in 2016. It tried to cross that level. Now, this is a similar setup to Rossell India. Now, try to cross this point over here. Again, try to cross this point. On the bottom, it tried to go down below this. It tried to go down. It tried to go down. It couldn't go down. So that's a rectangle pattern. Now, if you want to understand rectangle pattern, just Google rectangle pattern, and you'll have a lot of different articles. And this is one of the best setups to trade, right? Now, I can show you a lot of examples, about same setup, how it has done well. But again, the point to note is it has given a breakout in the month of June, and it has gone up higher, right? Now, I'm just going to zoom into the daily charts, just show you what's happening. Now, if you see this trend line over here, the stock is kind of taking support around that trend line, and today it has moved higher, right? So technically, again, this was a breakout before, kind of did a retest, again went high, came down, retest around the same zone. Now it has done a trend line retest here, also a support retest over here, and the stock looks really good to head much higher from here, right? So again, here I've told to buy around 345 to 355, the stop at 300, and for targets of 450 in the next few months on the short term, and 700 in the next coming years. And that's a 100% potential in this stock, and I see that easily being achievable, and I'm very confident about it. But always keep your stop. Just because I'm very confident about the stock, don't go and put all your money. It's very important to take this video from educational perspective and learn and understand why I'm selling that stock. That's much more important than making money, because once you learn how to fish in a lake, you can fish how many of fishes you want, rather than just depending on me, where I give you just 4 pieces of fish every weekend, right? So I'd really recommend, if you have any questions, do let me know in the comment section. If you understood the rectangle breakout, do let me know in the comment section. But this stock looks really good, and this is the last stock that we have covering in this week's newsletter and in this video. So I hope you liked my stock selection and my stock analysis. I go through a lot of stocks every weekend and I invest in this, right? So if you're already in markets for some time, you can use your own way of allocating money to the stocks. But if you're a beginner, don't forget to invest not more than 5%, and don't forget to exit the stock in case it hits stop loss. That's very, very important if you want to be in the markets for a long time and if you want to make good money. Okay. Now, if you want to know how that works, don't forget to go to my YouTube channel and watch the Trade with Trendline Investor series. They clearly show even after hitting 6 stop losses, we are still in profits. Right? That's the beauty of exiting a stock which is going down, but staying in a stock which is not going down, but rather going up. Right? So I'll leave you today at this point. Don't forget to share this video with your friends, because a lot of friends are going to benefit in this bull run. I select stocks after looking at 50-60 stocks every weekend. Also during the day, every day I go through another 50-60 stocks. So it's a lot of analysis which goes behind, and it's carefully select these stocks, because I don't want to give you a stock which has a lot of debt, or I don't want to give you a stock which is not doing well, but just the stock is going up because we are in a bull run, right? So it's carefully picked for you, and I'm sure that's helping you to make money. If you've made money listening to this video and the past videos, do let me know in the comment section, and don't forget to subscribe to my channel. Okay, so I'll leave you here. Take care and have a good week ahead. See you in the next video. Bye.